Hello and welcome to Business Today Television. I am Siddhartha Zarabi and with me Robin Rana. Welcome to Business Today Television, and I should in fact be welcoming you viewers from this office and these eye-catching red steps. Robin, where does this go really? Is this the pathway to money?
Well, I don't know that, but it is basically what we're trying to do. Look, you're dealing with youth in India.
Okay.
And so I architected a building. The whole idea was to bring dynamism, energy, and life into the building. And part of the building these are Times Square steps, New York, Manhattan. Okay. So you see the backdrop of Manhattan in the back. These are steps that you see at Times Square. Our employees normally sit during the day at the headquarters in here and sip their cup of coffee. Yeah.
Okay, a cup of coffee, the famous New York cabs here. But the reason I'm here, viewers, is Ebix Cash, Robin Rana's company, is about to hit the public markets. It's maiden IPO, IPO of 6,000 crore. Robin, give us some color and flavor about that.
Well, it's a 100% primary issue. We're raising 6,000 crores from the primary markets, and that's about it. Our intention is to, sometime in July, early July, we will hopefully open the issue, and let's see how it goes.
You want to talk about who else is sort of helping you put together this offering, the bankers and everybody else who is assisting you in this process?
We have 5 bankers involved with this. Of course, there's lots of attorneys and lots of partners, and so
lots of money being spent on that as well.
Absolutely, no question about it. But we have 5 bankers. We have Motilal Oswal, we have ICICI Securities, we have Yes Securities, we have State Bank of India, and we have Equirus.
Okay.
These are the 5 investment bankers who are involved with the issue.
Are employees getting anything in this public issue? Is there a small pot of gold set aside for them?
Absolutely. Look, our employees, we wouldn't be here without our employees. They are the ones who have brought us here in terms of 23 years of continuous profitability, 36% EBITDA in financial year 23, CAGR growth of 53%, close to $100 million of operating cash flow last year. It's all because of our employees. So of course we have options. We have given options to all our employees.
Okay, and for the record, how many employees are we talking about?
We have approximately 11,000 employees today. I think the number keeps evolving, but today the number is around 11,000 employees in India.
All right. Provide more color as much as you can at this stage, because it's still in process in some ways, Robin.
Look, Manik, it's 100% primary. I get often asked by various media folks, well, what's the catch? You're a profitable company, you have 53% CAGR, and you want to do 100% primary? Yeah. And I say, unfortunately, there is no catch. It is 100% primary. There's no secondary. Nobody's trying to sell.
Nobody's exiting.
Nobody's exiting in any form. Look, we will raise around, the goal is to raise around $730 million, so which is 6,000 crores at current currency rate. And goal is to utilize approximately 50% of it, actually a bit lower than that, to return a CCD loan from the parent. Okay. Ebix Cash has no other debt, so it's got no external debt. The only debt is with the parent, which is in the form of a CCD, which is earning 9% interest. And so once we pay that, that actually improves our income simply because we won't have that interest. And the remaining money will be used for working capital and organic and inorganic initiatives in terms of growth.
Would it be right to say that in some ways the US-based parent is also therefore getting the upside of the India story?
Well, absolutely. I mean, look, they are the parent. I mean, they are the ones who have funded half of the remaining funding actually. So when we invested around very close to $680 million into India in terms of acquisitions in the period of 17 to 19. And while we were doing that, we got around $350 million from the parent, and the remaining 330 came out from internal cash accruals from our own cash flows. So yeah, parent has always been there, and look, they deserve to get that upside.
Obviously a very happy parent.
I would hope so. And of course we are.
In the startup space, being profitable is something unique. I mean, without taking names really, how does it? How did you reach this point of being profitable? Because there are a lot of companies in the same space who believe in cash burn, growth, and profitability coming later.
Look, I always say, well, I've been watching this valuation madness in India, right? I always say that cows can't fly. We can keep saying one day this cow is going to, some cow is going to fly. What I've noticed is that people keep hyping organic growth, and at the same time, when sometimes companies announce organic growth and at the same time report higher losses, and their stock goes up. I blame investors for that. Investors per se have gone in and given these companies who have heavy losses but have some amount of organic growth, they've given them that extra upside, extra thinking in terms of thinking, well, my valuation will go up even if I report losses. I think that's a bad trend. I think after COVID, with what has happened in the market, investors are starting to realize that
some sanity has come.
Some sanity has come in. Look, companies like us, we have always believed that selling price has to be a lot more than cost price.
Yep.
Life has to be that simple. And it's not, we didn't plan an IPO and suddenly said we're going to be profitable. Look at our MAT credits that we have accumulated over the years in terms of our tax credits, advanced tax credit. And you're going to see we have been profitable for each of the years all through. We always have believed that without profitability, it doesn't make sense to be in business. One of the things I always tell my division heads and my managing directors in India, I always say that, look, it is very important for you to ensure that your margins are at least 30%. If somebody isn't delivering 30%, then in my view, they're still not successful. That's how simple it is.
Or that business is not worth being in.
Or that business is still not worth being in. At the same time, you have to be a little bit patient, but at the same time, I think doing business at a loss is like a disease. If you keep thinking, I'm going to lose money now, but I'm going to grow my business
later on.
And for example, I see people do it all the time. Let's say if I was in the travel industry, and I started booking hotel rooms, and I told everybody outside, come into my hotel.
Pay me later.
And no, pay me later. Not only that, I'm going to give my room free. What do you think will happen? Half of India will be staying in that hotel, and I'll be showing growth. But what worth is that growth? So I feel profitability is something everybody has to focus on today.
Last 5-7 years in India, huge boom in entrepreneurship. You come from a generation earlier. Was this focus on profitability something that you learnt in the States? Or was it part of your culture, inheritance? How did this focus on profitability really come?
I don't know whether it was part of my culture, but at the same time, I always, from the beginning, when I started my career, for me it was pretty natural that, look, if you're going to be in business, you have to make money each and every day.
But you don't come from a business community, from a business background, Robin. That's the reason I asked the culture question.
Well, look, I am a Warren Buffett fan. I really like the simplicity that Mr. Buffett brings to his style of thinking. And I've always been very influenced by that. I always believe, as I say, your financial vision needs to be rather simplified. If you can't define your business financials in a few minutes, then there's something wrong with the business. And that's what I have learned from Mr. Buffett. And I genuinely believe this is key. And so when I started on my business from the very beginning, even when I was a management trainee, I'll go back maybe 1990, I'll tell you that I just had it in me. I always felt what's the fun in doing business. And I didn't like the idea of carrying heavy debt on my books. I am one of those who likes to have cash on the balance sheet. I always say, if you have cash on the balance sheet, your internal gate is different, your external gate is different. And cash talks its own language. Otherwise, you're just giving a lot of talk to people, trying to convince them about how you run your business, how good or bad is your business. People should just look at your cash. If you look at EBIX cash over the last 23 years, for example, it will tell you the entire story. You will know whether this company genuinely is, how strong the company is. The fundamentals of the company come out from the amount of cash you've been holding through your existence.
This is important what we just discussed about having cash, and that cash speaks its own language. But in a world where a lot of people are not profitable, How do you manage to do that? How do you actually get that cash on the books, Robin?
Look, I think it first comes down to your culture. What do you really want to do? And I'll keep repeating this. If you want to make money, and I always say there's no shame in making money. As long as you realize that you're going to make money, and as long as you put your priorities on making money, you're going to make money. But more than beyond that, it becomes a question of how much money do you make? Do you make less money? Do you make more money? To do that, you have to have a vision. Look, if you're going to be just another product company, if you're going to just be competing on commodities, then you will not make enough money because you're fighting each other on price, and so your competition will come and possibly beat you down.
Yeah.
So the only way to succeed and make more money is if you are changing concepts. Like when Mr. Steve Jobs came in and he introduced an iPod, for example, or when he launched various other technologies, he was redefining the way we listen to music or the way we look at a phone.
The office? I was about to say, is this the iPod of offices? I mean, 2 bikes, and I'm sure these are real bikes, Robin. Tell us, before we go back to Money Matters, what is this setup all about?
Well, I mean, look, as I said, it's about dynamism, it is about change. It's about speed of thinking. And I was trying to convey that to my employee force. We're dealing with youth, right? What's the average age of an EbixCash employee? Probably 28 years old. Okay. And when you're dealing with that kind of an age group, they're looking for dynamism, they're looking for speed, they're looking for change and youth, right? And all of what you see around, including the bikes here, they're supposed to imprint a message in the minds of our employees that, look, we are a new age company. We are going to represent change. We are going to bring a paradigm shift in thinking of our clients, of our partners, of our customers, of our investors.
I was almost tempted to say, are these your motorcycle diaries? But clearly not.
Look, I don't make any decisions. Okay. I am a chairman of the board here. So we have a fantastic management in EbixCash. Those are the guys who make all the decisions. I'm a non-executive chairman, and all I do is I provide a vision. I let people make decisions. My goal is simply to provide them a platform to make decisions and create financial discipline. And then I want to back these guys, and they are the ones who make all the decisions. I'm here for sure.
The question that I want to pick up with Robin Rana is a statement that he's made to Business Today, which is leaving money on the table. Robin, explain the intent and the philosophy behind that statement.
Look, I've always been in the wealth distribution business in a way. I've always felt India has a big disparity between the rich and the poor. I've spent 2 decades trying to ensure that I can play my role in uplifting the underprivileged in India. I'm presently, as you know, building 6,000 homes for the slum dwellers of Bhavana. Bhavana is the 2nd largest slum today in the country after Dharavi. We've already handed over 2,304 homes. I also run schools all across the country, educating thousands of kids, providing the meals, breakfast, lunch, healthcare, and so on. When I look at my IPO, I'm hoping that my IPO is helping the middle classes, the lower middle classes, people on the street make a little bit of money. So from my perspective, if somebody asks me, how do you rate the success of your IPO? To me, the success is not about how much money I raise, and it's not about how many times will this issue be subscribed at. What I'm going to be looking at, success in my mind, the measure would be if people on the street said, after the issue, people on the street said, Robin Rana knew he had great results, and he still priced the issue at a low amount, and he left money on the table. If they say that, then I would think my IPO has been a grand success.
What's the broader sense about the Indian market? We saw a bit of a slump, and clearly your IPO is, so far this year, going to be the largest one.
Well, look, investors want profitable companies, new age companies. They're looking for state-of-the-art companies that are redefining paradigm, which are changing the thinking of people. People are tired of companies whose entire model is just pure growth without any profitability. So that's the sense I'm getting, that people are looking for growth, but they're looking for growth to be accompanied by cash growth. They're looking for growth to be accompanied by profitability growth.
Since you meet so many investors all across the world, what was this? Was it just a tulip kind of mania where people were putting in money on just 10 slides of a business plan? Because that's what we have seen happen really. Many companies, again, no names being taken, where there is no possibility of profits ever, raising money by the bucket load. What was it? A euphoria?
Siddharth, look, it is a cycle. It's not just an euphoria. It is also how things are set up by the involved parties. So if you have back-end investors, if you have strong, large private equity, if private equities made an investment, they made an investment in India, and they made a call, and they invested X amount of money, and they have a cash burn in that business, as they're running a privately held business. What do you think they want? They want to ensure that at some point, they have a point where they can recover their money, the investment that they have made. Till the time they went public, there was only a cash burn. So what did they do? I think if I'm an investor, the first thing I would look at in an issue is there a primary? Is there a secondary? How much is the secondary? If a secondary outscores the primary, as an investor, you have to start wondering, if it is such a good issue, why are the shareholders, why are the promoters, why are the people who backed it till now, why are they getting out? Look, there should be red signs all over it. You should be thinking, why am I doing that? So I think it's a part of the hype. Part of the hype is, as people who have invested in the beginning, these are large private equity groups sometimes.
And their mandate is to cash out at some point.
Well, their mandate is to cash out. They want X years of time, and they want to get out at some point. And look, it is, I don't blame them, but this is where the cycle is. And when they've created these companies with organic growth, then they've created some amount of organic growth. But they know they have a cash burn. So what they do, they start selling growth rather than the profitability, because that's the only thing they have to sell. And as I always say, when you have large money houses backing a company, and if these large money houses keep repeating, look, this cow is going to fly. And if they keep repeating, people who are watching it are gullible. They start believing one day this cow is actually going to fly. And I always say, look, this cow doesn't have wings. Cows don't have wings. It's not going to fly ultimately. So I think you, as an investor, one has to really watch this. And one good sign is if somebody has a secondary, a big secondary, then you have to start debating, especially if it outscores your primary, then you have to start wondering, you know, there might be some specific situation. I'm not saying that in case every secondary is a bad idea, but then you have to get deeper into it. You have to start looking at, why is the secondary large?
Absolutely, and that's an important point you make. A lot of people talk about funding winter, and when I speak with people who have gone and raised money, they say, well, you know, it's a case-to-case situation. It's winter for some, but it's good weather for someone else.
Look, Siddharth, there's a lot of money gravitating to India, and startups will always get support. When new money comes in, startups will get support, especially if these are new age startups. But what has changed is, now startups can't walk into a meeting with these 10 slides and say, I have growth. They will also need to show a model of profitability. If they don't have profitability today, at least they must show, okay, over the next 2 years, 3 years, if you're going to fund me, this is my plan, and I will deliver profitability. And the investors are going to hold their feet to the fire. They're going to demand conditions whereby they'll have to deliver something, and until then, the promoters will have some hiccups related to their holding in the company. They'll put some conditions related to that. So I think it's a good thing for the Indian market. Look, money coming into India, we want more and more money coming into India. But at the same time, we also want startups that can actually survive. Because if a startup comes in, creates and hires a lot of technology folks, and then suddenly collapses, you're causing havoc in the country, right? We don't want that. We want startups that are actually healthy and can survive. So I actually see this as a very positive sign that this might be the beginning of change. This might be the beginning of the fact that all startups who go into business actually have a real profitable plan to show how they will deliver profits.
What about margins really? And if you could also talk about the business that you are in, because some people would say, well, you know, at the end of all of this effort in India, margins are very, very thin.
Look, we are a living example of a company that actually delivers margins every day. Look at our last 23 years. Look at our financial year 23. Our financial year 23 margins were 36% EBITDA margins. How did we do that? It's simple. What you do is everybody has to have their own moat. We realized we were in highly regulated businesses where there was a barrier to entry on one side. We also knew that we had to create giant networks which people can't get into. Also, we realized that we create platform as a service, right? And we provide platform as a service on an on-demand basis where people pay as they get to use it. So what it means is our products. So let's take an example of if we provide technology to a bus corporation. For our business model is when your bus is fully functional and when you're actually buying tickets in that bus, then we will make money on every ticket. But for us to make money on every ticket, first the technology has to work. And it's called an integrated transport management system, that ITMS has to work. If it works, we deserve our money. But then we created a scalable model that every ticket that gets printed out, for example, in states, in India has the scale. Look, India has the scale. We have 28 states. There are states that sell more tickets than the entire, I would say, 3 times the population of United States.
Okay.
In one Indian state, there are states that sell 1 billion bus tickets in a year, right? Now imagine the scale. If I can get into that business and provide a scalable technology where for every ticket I am making X amount of money, what will happen is beyond a particular threshold level, every additional rupee that we generate is going to lead to increased profitability. So profitability doesn't come by accident. Increase in profitability doesn't come by accident. You need to first do something which is very different from others. Secondly, when you deploy it, you need to have a model which is scalable. As scale increases, your revenue should increase. And every a bit of revenue increase should result in a little bit of incremental profit. That should be the thinking, and that's the thinking we built in our business, in all our businesses. We said, look, every incremental at some point where you have crossed a scale level, a threshold level, then it should result in increased profitability. So I think all I would say, encourage entrepreneurs to do, especially the young startups, to do is think through your model. Do not just try to replicate or replace your competitor. That's not going to be enough to replace your competitor. You need to do something whereby your user, whether it is your B2B user, a business-to-business user, a corporate or a consumer, they need to be addicted to you. They need to use you because you're doing something which is very different from others, and the way you're doing it is very different from others, and you're making their life better and easier.
Would I be fair in saying, Robin, that for a 6,000 crore issue, you would by far be the only Kashmiri who's ever done such a large fundraise in history? Would that be a fair assumption to make?
I don't know. And look, I don't get a kick out of that. I'm a proud Kashmiri, no question about it. At the same time, I don't get a kick out of that I'm launching the largest IPO that a Kashmiri has done. I would be, like I said, I would be very happy if people on the street are making money out of my IPO. Then I'll be happy, not because I'm but I am proud about my roots and have been put in a place where I can influence people, influence my employees, hopefully provide value to my investors, provide value to my partners, employees, customers, and corporates.
Robin Raina, I wish you all the very best for that, and we'll keep tracking this public issue and come back to you with more. If you've been, thank you very much for watching.